Hi, this is Mike Crown with the NRBA, and welcome to another session of our Tune In Tuesdays. Each week we try to bring you not only information on what's going on in the market, but we try to get a mover and shaker and somebody who's really in the industry and doing well and get their thoughts and opinions. And we're here at the BDS seminar in January, and as we've got all the clients here, we got a chance to do some interviews for you. So today I've got Jeff Merrick from Granite Capital. And Jeff, thank you very much for coming in.
Not a problem. Thanks for having us, Mike.
Okay, great. Why don't you tell us a little bit about yourself, your background, and how you got into the default industry?
Sure. I've been involved in real estate finance, primarily mortgage banking, about 20 years. In 2007, the world turned upside down.
So, for everyone.
Yeah. So just decided to move with the tide, and at the latter part of 2007, jumped straight into distressed. By 2008, I had raised a fund, my first fund, and started my own equity group. Started buying distressed assets from banks on Wall Street, and just have never really looked back.
Really?
So,
well, it's a very busy time. It's very exciting in that market right now.
Yes.
How are you feeling about the fact that, I don't know how to say this nicely, everybody and their grandmother jumped into the game?
Yeah. Into distressed?
Yeah, and then NPLs and...
Yeah, it's actually, I think for the first time now, latter part of 2012, coming into 2013, we're really feeling an influx of players coming into the platform. So it's getting busy, competition's coming. I think it's great. I think that there is a lot of product that needs to be dealt with. I'm talking to the GSEs, Fannie, Freddie, HUD, all the major banks, and you know there's at least 10 million assets that they call shadow inventory today.
Yep.
So we need an army, and I'm glad everybody's finally looking and feeling what's going on and getting involved.
Yeah, that's one of the best answers I've gotten to that question. I like that. That's good. Tell us a little bit about the company and what it does.
So we have a parent company, Granite Investment Group, which has been about a 25-year-old real estate syndication company.
Okay.
We've got about $1 billion of assets that we own and operate in that platform. And then 2 years ago, decided to kind of go big in the residential non-performing space. So I was brought in to start and head the division. Came up with a strategy and direction for our division. Decided back then that it was a great idea to become a distributor, a wholesale distributor of non-performing loans. So that's what we do today. We buy in bulk. We typically buy 1,000 to 2,000 assets in a tranche. We will clean up title, make sure, if I sell you a loan, I'm going to guarantee that you're in first lien position and you have an enforceable lien that you can foreclose on if necessary. So we do a lot of the heavy lifting is the title curing and kick out process. And then we'll package it up with fresh BPOs, title, occupancy verifications, tax verifications. Give you everything you need to see, what you need to see to buy safely, and then we'll sell it to you at a great price.
That's fantastic. One of the things, and the reason you're here, is that you also have a really phenomenal training program to teach investors how to buy NPLs. So you not only get the product for them, but a lot of people don't know what to do when they do buy an NPL.
Right.
So tell us a little bit about the training you're doing.
Sure. Yeah, it's I think for 20 years, training and educating has been my approach to the marketplace. I always kind of lean on a philosophy that if I give, I gain, and it's been working. So, back in the mortgage days, I was doing home buyer seminars once a month, and here in the distressed in 2009, I started training nationally, and I was convinced that the challenge in our country was massive, and I knew that just the tip of the iceberg was showing.
Right.
So I decided to try and build an army at that time, and I think I was a little premature in 2009 because everybody was really hot on REOs, and it was hard to gather a crowd. Today it's much easier. So our company, we offer free trainings bi-weekly, and myself and Chaz Gwynn, our Senior Vice President of Whole Loan Trading, we conduct those trainings. They're all webinar-based, live webinars. Anybody who comes in and gets vetted with us, we have certain questions on our application to where we know the level of experience, and we'll start them off at the right block, and we'll give them either the 101 or more advanced training, or sometimes no training at all necessary, just how to trade with us.
Okay.
But it's all built in. We've got a lot of videos on our website, and then quarterly we actually do 2-day live trainings near our facility in Irvine, California, and those are free to our vetted customers, and so that's kind of how we approach it.
See, that's great. What we're seeing is a tremendous amount of investor interest in the real estate market. And you can go to any town right now and there's more investment groups. They're all down at the courthouse steps outbidding each other. And we're starting to see the investors that they want the REO, but they can't get to it because of the limited supply. So now they're getting it earlier in the process by starting to buy the non-performing loans and getting control that way.
Sure.
Are you seeing that trend nationally?
Absolutely.
And do you expect that growth to continue?
Yes. It's really, from our vantage point, it's the only way that we can see that you can create REOs. So the banks, I spend a lot of time in New York, and kind of my role is primarily to be with the banks and understand what's going on and what's coming down the pipeline. You know, they economically speaking, foreclosure times have pushed. The cost of carry is tremendous to them. So they've really pulled back on the foreclosure processes. They're doing a lot of charge-offs, they're doing a lot of note trades. So yes, what we see happening is non-performing notes are seeping into the marketplace, and it needs to end up in you know, a good investor, a localized investor, an REO agent that has the knowledge of what to do with that asset, and they need to actually work with the borrower is the primary goal that we really focus on and we train for. You know, you're gonna be able to make great money and you're gonna be able to save a family by working with that. So what needs to accommodate that is a discount on the deal. You know, if you get it at the right price, you can cut a balance, mod the deal. You know, all the different disposition strategies, you can execute any of them and make great money. At worst case scenario, you're going to have to foreclose. So you also need to buy to where if you have to go through a year process to do that, you're going to come out ahead. So a lot of the trustee sale guys, a lot of you know, private money guys are coming in. We're seeing a lot of different capital enter the space.
Yeah, one of the things that's changing, and I know it's being done at Rio Genesis with an opening platform, is it used to be you had to be a giant hedge fund with $1 billion liquid, and you had to buy these massive pools and take the good with the bad. What I think is great about what you're doing is not only do you have the product direct and it's quality product, but you'll sell as little as one note at a time to a local investor. Is that correct?
Correct. Yeah.
I mean, that's just fantastic because then everybody can get in.
Yeah.
And, you know, a lot of people, if they're new to this, don't really know what some of the valuation terms are.
Sure.
Most of the members that are watching this, they know what UPB is, unpaid principal balance, but we've also all learned that that doesn't mean anything to anyone anymore.
Correct.
So we buy based on FMV, what is current fair market value of the asset itself.
Absolutely.
What type of discount could our people expect if they were to purchase these notes?
Sure. Well, clarification on our product.
Please.
We are a niche player, so we focus in values $120,000 or less.
Which is great because that's where we all like to play.
It's a lot of properties.
Yes,
out
it
there,
is.
Right, and the banks really don't want to deal with the little widgets, and we really like them.
Okay.
So neither does PIMCO or BlackRock or Fortress. We actually co-bid with those groups, so they don't like them enough that they enjoy our bids with theirs, and they'll take the big stuff. So we'll peel off $120,000 or less. The discounts that you're typically going to see is a 60% discount off of fair market value.
That's amazing. That's great. I mean, I've bought some NPLs, and come to think of it, the house I actually live in, that my wife absolutely loves and I hate, but doesn't matter because you know how that works.
As long as she's happy.
That's how I got control of it, was by buying out the second at a discount and foreclosing subject to the first. So
Gotcha.
I even like playing with seconds. So I think it's a great opportunity for our members to actually create their own REO pool because, again, the non-performing are being sold, the banks don't want them. How much impact are you seeing from the banks being forced from OTS under OCC? Have you seen a lot of pressure because of that to where they're going to be selling a lot more non-performing?
Absolutely. Yeah, it's coming down. The AG's, you know, is over. So that's all settled and out of the way. Election year is done.
Yeah, thank God.
So all the politics are, you know, subsiding. And right now the forecast, we got a report from Deutsche Bank and Morgan Stanley. Looks like 2 to 3 times the trade volume will happen in 2013 versus 2012.
That's what we're seeing. We're seeing more pools than ever before, and we're seeing more bidders. So a
Yes.
lot of action activity. Well, what advice could you give to the members, the NRBA members, on how they can get involved in this and how they can make money and profit with it? Because we're all looking for ways to replace that lost inventory.
Yeah, I would say stick close to you because you're obviously barking up the right trees.
Okay.
We're committed to educating. We're going to collaborate with you and your group to do that. So really, it seems like lack of knowledge and that line of that just enough fear to keep people out of the game. So get educated, understand, what the actual disposition strategies are, understand how a servicing company can work for you and how a component servicer can collect for you and how outreach works. And I think the golden ticket is getting a hold of the borrower. They're either there, occupied, or they're not, vacant. And you need to learn immediately what to do and where to set your lines in the sand time-wise. I would always execute or initiate multiple strategies in the beginning. So I would buy a note and I would list it on a retail site. I might get a call in a week with a 20% margin and just take that offer and I'm out. So it wasn't exactly what I planned, but it was fast. It was a great margin. I'm moving. So create a process and set your timelines and stick to them and let your servicers and your vendors know, because that's really how you can grow in this business. You're not going to need to pick up the phone and talk to borrowers. Understand what the vendors can do for you. Utilize them to the max capacity. They work for you. Tell them what you want, what you need, and when you need it, and stick to the plan, and then you'll move through assets very rapidly and very profitably.
Okay. For those people listening to this who haven't been in that part of the business, that sounds really, really complicated. But I know it's not. And again, these are all things you're going to be training in your course, correct?
Yes,
so
absolutely.
Everything you just said will be explained how to do it. Especially servicers, people think that's a big term.
Sure.
We've all used them on seller carry loans when we've sold houses anyway, so we know what they are. We just don't use them that way. But the training would be fantastic, and we're looking forward to getting a lot more of that. Really simple. I've got a tremendous amount of the membership that deals with investors because I've been selling them REOs for years, and the investors are hammering them to get them non-performing. How do they get their investors the non-performing loans, and how do they bid and participate on that?
Well, the best way to get started is to go through Rio Genesis to access our company. Again, as you mentioned, we do sell one-off loans to entry-level investors. We are here to grow people and grow their businesses. And after that, we'll be collaborating with NRBA, and we'll be creating some videos that we can get out to the troops so that they get further knowledge and get up to speed. And then hopefully they'll engage and just plug into our system. So they can bring their investors in. There'll be compensation set forth for them, for their time and effort. That. Yeah, absolutely. We know that nobody wants to work for nothing or for a potential of an REO listing down the road. So we want to put some money in their pocket out of the gates. So bring your investors in. Myself, my staff is all trained to bring new people into this business. We understand not everybody gets it. It's a little foreign, so we're prepared for phone calls, conference calls, trainings. Whatever it takes to get the investor comfortable, we will commit the time and effort to do it, and we'll create success. From that point forward, really, if the group brings an investor in, we're going to trade with them. And every time we trade with them, they're going to get paid. And it's all tracked. We'll get reports, and we'll keep it all above board.
They're going to be thrilled about that. Yeah. Now, here's a question, and if you don't want to answer it, I understand completely. But it's the same question I get asked all the time. Where do these NPLs come from, and where do you buy from? And if you want to answer generically for trade reasons, I understand completely, but it's something that they're going to ask me, so I just want to ask.
No, that's fine. We buy from the likes of Chase, Wells, Citi, GMAC. We buy from the top 6 banks in the country. We are also now entering into relationships with the GSEs or HUD specific, where we can buy on what we call negotiated trades. So that allowed us to lock in a commitment of buying for the next 6 years. HUD is on a 10-year liquidation plan right now, so they're looking to liquidate 40,000 loans a year for the next 10 years. Fannie is about to jump into the same time frame program, and so is Freddie. So it's been time in Washington, time in New York, and the time has been well spent. So we've basically got the business laid out. I call it legs. It grew some legs on us. So now we're looking at, for our business model, we're looking at a really strong head-down 6-year run.
That's fantastic. So there's just so much inventory and some of these NPLs coming out, because what we're hearing from the banks is they don't want to foreclose, both from regulatory cost as well as political issues.
Correct.
And the public relations issues. So you see this continuing as well for a long time?
Yeah, I think it's. I think the primary of what you just described is the headline risk. You know, it's they don't want to be on 60 Minutes.
No.
So what they'd rather do is discount to a reputable fund who's got some substance to them, create another target that's a diversion away from them, and that's basically what we've become. So we're obviously our responsibility to our borrowers is it has to be first and foremost. So when we buy 1,000 or 2,000 loans and they start calling in, we need to help them. We don't really deploy any loss mitigation strategies other than call-ins. So if they're raising their hand and asking for help, we will talk to them. If not, everything's getting packaged and ready for sale.
Okay, so you're not really looking at loan mods and workouts. You're simply aggregating and getting it to the people who want to do that in the local markets.
Yes.
And one of the things is I've never bought, well I have, and I'm sorry I did sometimes, I've always bought stuff in local markets or markets that I knew incredibly well.
Yes.
So it just makes the risk much lower and the returns much better. So I think it's going to be a phenomenal program. I know the members are really excited to have you here and they're all pumped up. So thank you very much for coming in.
Yeah, my pleasure.